Hey, Garrett here, Security Pacific Real Estate, and I wanted to come on here today to talk about the home buying process because that is a very popular question that I get from not only first-time home buyers, but also veteran home buyers. You know, so maybe you bought maybe some years ago and the process has probably changed since then, so it's always good to get a good refresher. So I'm gonna make it very easy for you. The first step, you're gonna pull out your phone, you're gonna call 510-620-4758, or you're gonna send that number a text message, and I'm gonna answer, and I'll get right back to you. So the next step is you wanna ask yourself is, am I ready to buy? Do I have a steady income? Do I have low to medium debt? Do I have some cash for the down payment and closing costs? Now keep in mind your closing costs are going to vary significantly based on the terms of your loan and your purchase contract. They're typically 1 to 2% of the purchase price, but we'll get into that a little bit later. You also want to consider the rule of twos. You're going to want 2 years of your tax returns, 2 most recent pay stubs and W-2s, and your 2 most recent financial statements. And lastly, you're going to want to have 2 years with the same company or in the same industry. After you've asked yourself, are you ready to buy? You're going to want to actually get pre-approved. That's the next step. So at this point, you're going to want to choose a lender. Now it can be a bank that you use, it can be a lender that you know, or I can refer you to many different local reputable lenders who I use, who I know are very, very good and will be in great hands. Now at this point, you're going to want to fill out a loan application. The lender will inquire about the following 6 main criteria: your income, your savings, capital and investments, your credit history, your debt level or debt to income ratio, your employment history, and the value of the property you wish to purchase. They want to know this because they want to put together buying scenarios of what your monthly payments would be and what your closing cost amount would be. Also take into consideration if you're going to have an HOA fee. The lender will definitely need to know that. So once you're pre-approved, we get to the fun part. This is where your home search starts. So understanding what you're looking for is a top priority. We want to focus on the features and needs of your future home. So what is important to you? Is it the location? Is it the price? Is it having an HOA fee? Are you looking for a single family home, maybe a condo or a loft? Do you want multiple units to have some income potential? Are you focused on big square footage, a high bed bath count, views, your yards, parking, garage? I mean, the list goes on and on. Transportation, school, shopping, view. What is important to you? That's what we want to focus on here. That'll help us find you the perfect house. Okay, so now we have a good idea what you're looking for, what your perfect house looks like. So how do we find it? We're going to use various search tools in order to find this perfect property. As your realtor, I'm going to use things like the multiple listing service. You might have heard of that. MLS is another name for it. My agent network, my company collaboration. We're also going to, we can look at open houses. There could be for sale by owners. If you see a for sale sign, you can always shoot me the address. But most importantly, you're going to get some high-tech tools for home searching from me, and I'll tell you about those right now. Now, as my client, all of these high-tech tools are 100% free for you. That's right, no cost. Use them as much as you want. They are free. Okay, the first tool you're gonna get is a custom home search system tailored 100% to you. It's a revolutionized consumer-facing website. Okay, prices and inventory are updated in real time directly from the MLS, which is what us realtors have access to. You can estimate your monthly mortgage, and you can also request showings in person or virtual. The next free tool you're going to get from me is my mobile home searching app. It's called the Etta app. It's not available in the App Store, it's only available from me, but it'll allow us to discover, discuss, and organize your home search together. You're going to be able to search for homes on the go, receive property alerts for homes that fit your criteria. You can compare your favorite properties with your family and your friends, and you can always directly message me straight from the app if you see a home that strikes your interest or if you just want some more information about a specific property. So the next tool you're going to get from me is my favorite tool. I think absolutely everybody should be on it. It's called Homebot. So I don't know if you've heard about it or not, but it's an incredible tool to help you maximize your wealth with market knowledge. So as a buyer, you can explore buying markets. All you have to do is input the zip code you're looking in. It'll give you information about if it's a buyer's market, if it's a seller's market, the average days on market, the average price, and other great pieces of information that you as a buyer would want to know. If you're a home owner, you can know your total cash out power. You can also understand when you can drop mortgage insurance. You can get a monthly snapshot, wealth snapshot of your current home and see if the values are going up or down, okay? You can understand when to refinance. You can understand your purchasing power for a second home or a trade-up. You can see the wealth power of extra principal payments. If you pay $50 extra a month, how much sooner will you pay that loan off? How much interest will you save? Get smart about your wealth from short-term rentals and understand your mortgage, your interest versus your principal. This is such a cool tool. You can sign up for me today, and like I said before, it is 100% free. All these tools I'm offering you are 100% free as my client. So what have we covered so far? First, you picked up your phone and you called or texted me, and I answered. The next step after that, we discussed, are you ready to buy? And then we got you in touch with a lender, you got pre-approved, we discussed what your perfect home looks like, and you've been using all the tools you need for us to find that perfect home, which we did, and now we're gonna put an offer on it. So in order to make an offer, what do we have to do? First off, we're gonna review all the comparable sales, the comps, and we're gonna discuss appropriate offer strategies. We're gonna review and sign all the available disclosures and reports provided to us by the seller. Doing so will make your offer very much more competitive. We're going to prepare a detailed offer package, which includes bank statements because we need proof of funds for your down payment and closing costs. You're going to have your loan pre-approval letter, and if you want, you can also include an introductory letter to the seller if you think that's important to you. I have seen sellers accept offers specifically because there was an introductory letter from the buyer. We're going to determine length of contingency periods for your inspection contingencies, loan contingencies, appraisal contingency, and if you have to sell your home first in order to buy, or if there's other contingencies in place. That'll be a part of our offer strategies. We're also going to determine what your initial deposit is, your earnest money deposit, EMD, and your down payment. Keep in mind, your deposit is a part of your down payment. And after that, lastly, we're going to negotiate the best possible price for your new home and get that offer accepted. Got that offer accepted. So now what? Now we are in the escrow phase. We're going to set up escrow. We're going to choose our escrow, which is actually going to be defined in the purchase contract. We're going to get that preliminary title report ordered from the title company, and we're going to deliver that initial deposit, your earnest money deposit, to the title company. Typically, your deposit is going to be 1 to 2% of the purchase price. So once we get your offer accepted, we're also going to notify your lender. We're going to submit the ratified purchase contract to the lender. The lender will then get the appraisal scheduled, and we will also confirm the loan and appraisal contingency removal dates with the lender to make sure we're all on the same page. As I said earlier, we're going to have 3 main contingencies: the appraisal contingency, loan contingency, and also your inspection contingency. This is where you're going to do all of your due diligence. We're going to conduct any buyer inspections that you want. For example, it could be a home inspection or a pest inspection, a chimney inspection, roof inspection, foundation. You could get anything you want inspected, plumbing, electrical, whatever it is. We can get those within our inspection contingency period. You can conduct another review of all the seller disclosures or reports. Maybe they've provided us with some new information. And then we're also going to review the HOA documents if applicable. If you are purchasing a property in an HOA, there will be a huge stack of documents to review, but don't fret, I'll get you through it. So what happens if we get some inspections done and we find out stuff about the property that we had no idea when we got your offer accepted? For example, what if it needs a brand new $10,000 roof? Maybe it needs a brand new foundation, or it has a $50,000 termite report. Whatever it is, whatever the results are from these inspections, if there are any new critical issues discovered during your buyer inspections, we can either negotiate the seller to do some of the repairs, some or all of the repairs. We can also try to renegotiate the price, or try to get the seller to agree to credit you a portion of money towards your closing costs. Now, the seller doesn't have to agree to that, but we can always ask. if you and the seller are not able to come to an agreement based on the inspection results. For example, if the seller doesn't want to give you a price reduction or give you a credit or do any repairs and you don't want to move forward with the deal, because you have that inspection contingency in place, you can cancel the deal, get your deposit back, and go search for another property. Another very important step that we want to make sure we take during the inspection contingency period is securing you a home insurance policy. So you're going to select your home insurance company and your coverage, and then you're going to submit that insurance information to Escrow and the lender. And the reason we want to make sure you get this policy secured during your inspection contingency period is because some properties are in areas where the home insurance might be very expensive. For example, if you're in a fire zone or a flood zone, things like that can make it very difficult and expensive to secure home insurance. And if it's too expensive, you might not be able to close on the deal. So we want to make sure that you can afford the home insurance and secure that policy before you remove your inspection contingency. Okay, so now we're at the step where we've received the appraisal back and it's completed, and now the lender is going to review it. As long as this appraisal comes in at the purchase price value, then we're good. That's the main thing we want. Now, if the appraisal comes in under the purchase price value, for example, let's say you're purchasing a $500,000 property and you're putting down 20%. So you're going to be putting down $100,000 and your loan is going to be $400,000. It's going to be 80% of the whole purchase. Now, if the property doesn't appraise to the $500,000, let's say it appraises at $490,000, then the lender is not going to give you a loan for 80% of $500,000. They are going to give you a loan for 80% of $490,000 because that's the appraised value. So now we have a $10,000 gap where either you as the buyer will have to come up with cash to cover that difference, or we can go back to the seller and try to renegotiate that purchase price and ask for a price reduction. Now, if the seller does not want to lower that price and you don't want to put down more cash to come up to fill that gap, then you can cancel the deal, get your deposit back, and go find another property as long as you still have that appraisal contingency in place. Now, we will not remove that appraisal contingency until we know for sure the property either appraises at value, or we're able to renegotiate terms with the seller, or we're able to come up with the amount of money in order to fill that gap. Let's assume the appraisal came in at value. There's no conditions, no repairs have to be made, so we're good. We can go ahead and remove that appraisal contingency. So now we want to focus on our loan contingency. In order to remove this, we want to make sure that the loan has been approved by the underwriter. So the underwriter is going to review the file. They're going to ask for conditions to you as the buyer to come up with more documentation or employment history or whatever it is in order to get that loan approved and fully underwritten. Once that happens, you'll have a final financing approval by the lender, and we can go ahead and remove that loan contingency, and we're one step closer to closing that deal and getting you that home. So once we've done all our due diligence, we've gotten all of our property inspections, we've got confirmation from the lender that the appraisal is good to go and the loan is approved, we can go ahead and remove all contingencies. Now at this point, we want to make sure we're very clear that we're good to go. And what I mean by that is we do not want to have a reason we're not able to close once we've removed these contingencies. And the reason is because if for some reason you have to back out of a deal after you've removed all contingencies, for some reason if you're not able to close, then you could potentially lose your deposit. So we want to be very careful before we remove all contingencies that we are in fact ready to go, which we will be, so don't you worry about that. I got you. This is also the time in the transaction when you want to get all your moving details finalized. So you want to set up your utilities, electricity, water, garbage, phone, internet, alarm, etc. I will give you all the contact numbers for the specific city you're purchasing your property in, so you can just go right down the list and call who you need to call. You're going to contact your HOA office to schedule your move-in if your property is in fact in an HOA, and you're going to schedule your move. I can also refer you to moving companies, very reputable, who can come and give you prices so you can make sure you're getting your belongings to that new property safe and sound. Okay, so we've made it to the sign off and loan funding phase. We are so close to getting this deal closed. So what we're going to do now is review all the closing and transaction costs. Our escrow officer will actually send us what's called an estimated settlement statement that'll itemize every single cost and fee that goes into your loan and the closing costs, transfer taxes, everything. So you can see exactly the amount of money that you'll need to bring in either with a cashier's check or a wire. So we're going to schedule your signing appointment either with the escrow officer or a mobile notary. The mobile notary can actually come to your house if you want. You're going to sign the loan docs, and like I said, you'll provide that cashier's check or you're sending a wire, which is the balance of your down payment and your closing costs. And the lender will send the balance of the funding to the title company. So that's the balance of your loan. So I get asked a lot, what are some of the items that go into closing costs? Now keep in mind, remember I said that closing costs can vary significantly depending on the type of loan you have and the terms of the purchase contract. But here are some various items that could be included in your closing costs. Not limited to these, but here are some main ones. Could be the appraisal, property inspections, lender fees, escrow fees, title insurance, document preparation fees. There could be a credit report in there, some transfer taxes for city and county, notary fee, technology fee, recording fees. So these are all different types of fees that can go into it. If you want, I can send you an example of an estimated settlement statement from an escrow officer, which shows all the different types of fees that go into it. And keep in mind, these fees vary by city and by county. So there are two different types of closing costs. The ones I just named were non-recurring closing costs. Another type are recurring closing costs. And these can include, but are not limited to, things like property taxes, hazard insurance, and HOA dues. Okay, once you've signed your closing papers, once the seller has signed their closing papers, once you've brought in the balance of your down payment and closing costs, and once the lender has funded your loan, our escrow officer will then release the deed to be recorded by the county recorder's office. Now, once this happens, we will get a notice from our escrow officer saying that we are now on record. So congratulations, this is when you can obtain your keys to the new home because you are now a homeowner. Time to celebrate, baby. Woo! Okay, so first things first, moving in. We're going to want to change all the locks on all the doors and update your security system. Now, many home warranty companies, and I highly advise you to get a home warranty plan. Many of those companies will provide you lock changes. I know Fidelity National Home Warranty offers 6 lock changes once you become the new homeowner. We're also going to want to complete the planned repairs or any improvements that you deem necessary. Get acquainted with your new neighbors and your community. So the time has finally come, time to settle in, unpack, unwind, and enjoy your new home. Meet your neighbors, attend the HOA meetings, and finally, last but not least, plan your housewarming party. What do you want me to bring? It's been a pleasure. Thank you guys so much for watching this. If you had any other questions, please don't hesitate to reach out to me anytime. Like I said, my number is 510-620-4758. Call or text me. Like I said, literally anytime. I'm always available for you. And if you enjoyed it, please feel free to share it with your friends and family. If you have anybody looking to buy or sell, I'd be happy to talk to them. So once again, thank you for your time. I appreciate it. Now have a great day, and I hope to talk to you soon. Take care.